Joining us now is Adam Singolda. He's the founder and CEO at Taboola. Adam, it's great to have you back on the show.
Thanks.
Take us through the numbers that you've made public about this deal.
Sure. So first of all, we're super excited. I feel like I've been probably working on it. We've been working on it for about a decade. So it's about time we do it.
Wow. Congrats.
Yeah, we're really jazzed. So the deal structure is that we're merging Outbrain and Taboola into one company. We've signed the deal, so now we're before closing. The deal structure is $250 million in cash and 30% of the combined company to Outbrain shareholders.
So what does this combined company look like, especially to the consumer?
I mean, I think from a UX perspective, you should expect similar type of recommendations, giving you more of the site that you're on. So if you're going to CNN or NBC News, you'll see more recommendations from the site that you're on. And then intermingled into it will be sponsored recommendations that would show you stuff from around the web. So similar, but in terms of the future, I think we're going to have a much more energy, resources to invest in building a true competition to Facebook and Google.
Well, yeah, so that's been the immediate reaction of this deal is getting some of that ad revenue growth that Facebook and Google continue to just dominate. How can you now be better positioned to take on those companies when it comes to digital ads?
I think first of all, we have a better chances together than independently. We're still a small portion of the industry. We're $2 billion in revenue combined, which is bigger and exciting, but we're still $2 billion out of $90 billion of banners and out of $300 billion of digital advertising. So it's small, but on the right direction. And the reason I'm hopeful and I'm optimistic about it is because I feel like the world deserves a non-consumer facing company that's all about its partners. And that's something that's very special for Taboola, which is we only grow if our publisher partners grow. We only grow if advertisers succeed. And we never have this identity crisis about should we choose ourselves or should we choose our partners, because we only succeed if our partners succeed. So I think that warrants for us a very strong and exciting journey.
How is your company and your services more trustworthy than a Facebook or a Google, where we've seen a ton of information, right, take hold, especially around the time of the election, and 2020 does draw closer?
Well, one, I think if you're an advertiser and you're thinking, where should I advertise, in Google, Facebook, or Taboola, the one thing that's really nice and exciting about us is that we're recommending your recommendations side by side to editorial content. So whether that's CNBC, Bloomberg, Cheddar, your recommendations will be side by side to something that an editor curated, an author, writer wrote. So you're getting the clout of the editorial environment, which I think is really amazing, especially these days, because it seems like it has more value and more trusted than just a social feed that nobody knows what's above or below you. That's one. And two, we have a 50-people team that reviews every single advertising. So when you want to work with us, we review that what you submit to us goes through our policies.
It's certainly a rough time in the market, right? We've seen the major indices down now for a third straight week, down again today. Companies like WeWork are not able to get out the door, even if you can IPO right now. You have not been met to fanfare like earlier in the year. Is it hard to get a deal done these days, a merger, as you just did?
I mean, I don't think that the public markets necessarily affect companies like us. We're both profitable. We're both growing fast, right? So for us, it was more about creating a better future. And we're not going public right now, though I do think that will become a great option for us in the future. I do think that free cash flow is the new West Village, and it's sort of like
I like that.
You need to be not only a growing company by user base or whatever you're measuring as a metric that people care about, you also have to show that you're kind of an old school traditional business. People like boring financials are great these days. So I do think that for companies like us, investors will appreciate the financials we bring into the table, which is for a long time, profitable, growing fast, and that's something that will become, I think, more important over time.
And cash flow positive?
Yeah.
Profitable, cash flow positive, still growing fast. Now that these two companies have merged, what's sort of the next stage? Would it be an IPO, or would you get acquired by one of these companies you're competing with?
Well, we're not looking to sell the company. We're having such a good time, and it's really a Disneyland for geeks for me. I come to work, I get to dream, and I get to do it. So it's really amazing and special. But I do think that will be even stronger and better for our publisher partners and advertisers, and we'll have more financial options, whether that's going public, raising money, or other stuff.
You said between the two companies you have $2 billion a year in combined revenue. Give us a general idea of who your clients are.
Clients as in advertisers?
Yeah.
I mean, it can be
Because
anyone.
I think a lot of people associate it with media companies.
I mean, anyone from Wayfair, if it's on the commerce side, can be subscription services, Blue Apron and so forth. And it can be big brands like the Toyotas, Intel, and so forth. So you really see a full funnel type of clientele with us, from smaller brands to big brands.
We're seeing a clear line in the sand drawn on the political front, right? Obviously, President Trump promoting deregulation, increasing front runner on the Democratic side, Elizabeth Warren calling for big tech to be broken up, more regulation on the banks. Is there a presidential candidate on either side emerging that would be friendly to your business in 2020?
I'm gonna diverge the political question, but I will say that I think that these are great time for companies, especially big companies, to share back. From my perspective, the biggest challenge Facebook has is not that they're big. They're bigger companies that get much less attention from regulators and and around that. I think it's more about the fact that for a company that invented the sharing button, it's time Facebook shares some more. And I think whether that's giving back more traffic to publishers, more data and transparency about what they hold about consumers. So I feel like if you're Google or Facebook, it's not about so much your size. It's about, in my opinion, how much do you give back to your environment and surrounding to give other companies and businesses and users a chance.
So Kristen mentioned Elizabeth Warren. The senator has released her plan to break up big tech, what she would do if she were elected. Part of that plan includes forcing companies like Google to sell Waze, Nest, and DoubleClick, and then a company like Facebook to divest from WhatsApp and Instagram, companies that they've acquired over the last few years. Is that a plan that you would be for? Does that help you?
I don't think it hurts me or helps me in any specific way. Again, Google and Facebook less so much affect Taboola as a company directly, but they affect people we love around us. So they affect publishers if they send them less traffic. They affect advertisers if they make it harder for them to succeed. So for me, it's more about our partners and ecosystem that I'm concerned about, and it's less so much about us directly.
Adam Singolda, founder and CEO at Taboola, thank you so much for joining us on Cheddar
Thanks for
today.
having me.
Appreciate it.